Hello and good afternoon, ladies and gentlemen. Welcome to today's virtual non-deal roadshow. My name is Noella Alexander Young, virtual event moderator here at Renmark Financial Communications. On behalf of our team, we want to thank everyone in Boston and surrounding areas for joining us today for the presentation of Perpetua Resources, trading on the Toronto Stock Exchange and the Nasdaq under the ticker symbol PPTA. Presenting today is Chris Fogg, IR Manager, and we'll be joined by Jessica Largent, Chief Financial Officer for the Q&A. With that being said, I will now hand the floor over to Chris.
Hello, and thank you for joining today. Our vision at Perpetua is to develop one of the lowest cost open pit gold mines in the US, provide the country with a critical mineral important for national defense and clean energy transition, and to restore an abandoned brownfield site. Please take a moment to review our cautionary language on slides 2 and 3. Why Perpetua Resources? Our investment thesis has never been stronger. We plan to redevelop one of the largest, lowest cost, and long life gold projects in the US. Our project has great economics with a 15-year reserve life, a payback period of less than 3 years, and an internal rate of return greater than 20%. And we have a strategic and valuable byproduct in antimony. Our project is in one of the best mining jurisdictions in the world, and we have strong community support. The strong support we have in Idaho has been built over the last decade as our communities and politicians have seen our commitment to responsible mining and restoration at Stibnite. One of the reasons we are so unique is because we will take an area abandoned after 100 years of mining activity, most of which was to support World War II and the Korean War, and we'll use a sustainable approach to restore the environment and develop a modern mining project with critical mineral production. Perpetua Resources' vision is being advanced by a diverse group of experienced leaders, and we are fortunate to have a strong board of directors. You can see here that several of our board members have experience at some of the largest mining companies in the world, and others have relevant political and financial experience to help guide the company as we move forward. With 4.8 million ounces of reserves, the Stibnite project is one of the largest gold reserves in the United States not owned by a major producer. And it is the 7th largest reserve out of all US gold deposits. In total, we have 6 million ounces of measured and indicated resources with an additional 1.2 million ounces of inferred resources. And this slide does not include our significant antimony endowment, which includes reserves of 148 million pounds and 206 million pounds in measured and indicated resources. When it comes to open pit gold mines, we have one of the highest average gold grades with approximately 2.2 grams per ton in the first 4 years of production and 1.4 grams per ton over the 15-year mine life. The historical tailings alone that we'll reprocess early in our mine plan have 1 gram per ton gold. Our annual gold production will average approximately 300,000 ounces per year over the mine life and more than 460,000 ounces per year in just the first 4 years, which would make it the largest producing mine in the US outside of the Nevada Gold Mines joint venture. Average daily mill throughput will be about 20,000 tons per day, or about 7.3 million tons per year. And our process plant is designed to process sulfide, transitional, and oxide material from the different deposits. Our project will be powered by the lowest carbon emissions grid in the nation. Our ability to source low cost Idaho hydropower combined with the low strip ratio and antimony byproduct credit of $70 per ounce over life of mine, we are well positioned in the lowest quartile of the global cost curve. Life of mine all-in sustaining costs will average less than $650 per ounce, and in those first 4 years, will average less than $450 per ounce. Our project's free cash flow profile demonstrates exceptional values at a range of gold prices. Using our base $1,600 gold price, the project has an NPV of greater than $1.3 billion using a 5% discount rate, and it delivers an internal rate of return of more than 22%. We have good leverage to higher gold prices as well, where the MPV increases to approximately $1.9 billion at a gold price of $1,850 per ounce. But I think most importantly, our project is resilient to lower gold prices given our solid position on the cost curve. Based on our current market cap, we are trading at nearly the widest discount to NAV despite achieving significant milestones. And I think this represents a very attractive entry price for new investors. Now I'll just touch on our strategic and valuable byproduct antimony. Antimony has been identified as one of 50 critical minerals, given the US has no primary production, and because China, Russia, and Tajikistan dominate the world supply with more than 90% of global production. The US, Canada, Europe, and Australia have all included antimony on their critical minerals lists. Historically, antimony has been used for its properties of strengthening alloys and making them resistant to corrosion, and as a flame retardant. Currently, antimony is being used in bearings for wind and hydro turbines, tinting for solar panels, and in semiconductors. And it is also used in munitions for our military. And most notably, it is also used in a low-cost liquid metal battery. Our current administration has made it clear that securing America's critical mineral supply chain is essential to our national and economic security. And we couldn't agree more, and we are ready to be part of the solution. In fact, our project alone could supply more than 35% of US annual demand over the first 6 years of production. We plan to produce an antimony concentrate at scale, but we are also evaluating opportunities to produce military-grade antimony trisulfide. We are both excited and proud to have recently been awarded not one, but 2 grants from the US Department of Defense through the Defense Logistics Agency to study this potential. We are confident in our ability to meet the military specifications because historically, our site supplied the War Department with 90% of antimony demand and helped define the current specifications for multiple munitions products. Perpetua also continues to show the role modern mining can play in solving the world's climate change challenges. Last year, we signed an agreement to supply a portion of our antimony for Ambri's liquid metal battery. Our agreement establishes the foundation to help facilitate the decarbonization of energy grids. Ambri has developed an antimony-based low-cost battery for the long-duration energy storage market. And our project will provide them with antimony from the only responsible and domestically mined source of the critical mineral. Our minimum supply commitment can power over 13 gigawatt hours of energy storage. And just to put that into perspective, that is more than 8 times the total additions to the US energy storage market in 2020. And this amount of storage is enough to power approximately 1 million American homes with solar or wind power for the 20+ year lifespan of the batteries. This partnership directly links the restoration and responsible redevelopment of our project to achieving our nation's energy goals. Perpetua's restoration and mitigation plans provide early action for water quality and legacy feature cleanup, as well as concurrent restoration and reclamation for any new disturbance. Our project will ultimately improve water quality, restore fish passage that has been blocked for decades, and clean up legacy tailings and waste sites. We are very proud to have broken ground this summer on our pre-permitting early cleanup activities and water quality improvements at site under the ASAOC agreement with the EPA and Department of Agriculture. And we recently completed initial stream diversion activities for the 2022 field season. The ASAOC agreement was necessary to authorize Perpetua to voluntarily address environmental conditions without inheriting the liability of the conditions left behind by past operators after these actions are completed. The first 4-year phase of this project, which is expected to run through 2024, includes removing 325,000 tons of legacy waste and tailings away from the river and rerouting streams to keep clean water clean. Immediate time-critical needs are addressed over the first 4-year phase, and then the agreement allows for more comprehensive cleanup activities if the project is approved. all of which will complement the restoration activities connected with planned operations depicted on this slide. I am very excited to provide an update on Perpetua's progress toward achieving our vision. Today, we are one big step closer following the release of the supplemental draft EIS for public comment. Importantly, our mine plan was identified as the preferred alternative in the draft document, providing further clarity for the remainder of the NEPA permitting process. This is a major milestone for our project. Following the public comment period, the U.S. Forest Service, as the lead agency, will review and respond to substantive comments it receives, which supports the preparation of the final EIS and record of decision. Based on the comprehensive scientific analysis conducted over the last 6 years and the expected path forward, we believe a final record of decision is achievable in late 2023 or early 2024. This timeline assumes approximately 6 months after the comment period ends until a final EIS and draft record of decision is published, and roughly another 6 months before a final record of decision. A detailed schedule review from the Forest Service is anticipated after the comment period closes, currently slated for January 10th of next year, and after comments are reviewed. Assuming a construction decision is made in early 2024, our project is expected to be in production in 2027. A more sustainable future has been a cornerstone of our company since the beginning, and our proposed plan was built with responsible solutions in mind. We began environmental study and feedback gathering in 2010, long before we submitted our original plan of restoration and operations to the Forest Service in 2016 to kick off the NEPA permitting process. The stakeholder feedback we've received over the years has been instrumental in helping improve environmental outcomes for our project. Following the draft DEIS comment period in 2020 and refinements to our proposed plan, the Forest Service eliminated 2 alternatives from further consideration and made the decision to go through a supplemental draft EIS process to evaluate the remaining access route alternatives and our plan refinements. Our proposed plan incorporating the burnt log access route was identified as the preferred alternative in the supplemental DEIS because our plan incorporates water management and closure activities to reduce the duration of long-term water treatment requirements, because it incorporates measures to manage stream temperatures, and because it reduces the potential for impacts associated with access, transportation, and hazardous materials on Johnson Creek and the East Fork, South Fork of the Salmon River. Under NEPA, a preferred alternative is identified by a federal agency to let the public know which action the agency is leaning towards selecting as final. Today, we are closer than ever to achieving our vision based on this very positive development for our project. I've covered several of our recent achievements already. I would also just highlight that we've been trading on the Nasdaq for well over a year now. In August of 2021, we raised gross proceeds of $57.5 million in public offering. And as of October 31st, we had about $28 million in cash to continue advancing permitting and early restoration work and field operations. Earlier this year, we launched our sustainability roadmap and our 9th annual sustainability report. In late June of this year, we received our first permit, the Clean Air Act permit to construct. Looking ahead, we have some exciting milestones, including our next major permitting catalyst. Despite all of our recent achievements and near-term catalysts, we continue to be significantly undervalued relative to our peer group, with nearly all of the pre-permitted projects trading at a multiple of 3 to 4 times where we are trading. We expect a significant re-rating to occur as we advance through the permitting process, but also believe there is an opportunity today with investors who recognize the strategic value of our asset for its antimony and who value companies with ESG principles that are foundational to their business plans. Turning to our capital structure, we have a strong group of existing shareholders, as you can see here. Our top shareholder is Paulson & Company with about 39% of shares outstanding. And our next largest shareholders are Kopernik and Sun Valley Gold with about 8% and 7% respectively. Overall, we have 63 million shares outstanding and nearly 66 million shares on a fully diluted basis. And as I mentioned earlier, we had approximately 28 million in cash on our balance sheet as of October 31st. Summing it all up, Perpetua Resources is unique because we bring solutions. We have a large, low-cost, and high-grade open-pit gold mine. We will offer the only domestic mine source of the critical mineral antimony, and we will use mine development to fund restoration at an abandoned mine site. Not only is our opportunity unique, but it is also the right time. Our company is trading at a significant discount to our project's value, and as we continue to hit our next permitting milestones, we expect our valuation to improve, creating value for our shareholders. So thank you, and I'll turn it back to Noella.
Thank you, Chris, for the great presentation. So now we'll move on to the Q&A session. The first set of questions are related to operations. The first one being, outside of Stibnite, what other exploration targets do you have?
Yeah, we have a number. We're focused right now on permitting for our project because we think that that can create the most value for our shareholders at this point in where we are. But we have, and I think also I should mention that separates us from other companies, early stage companies, and that we have a very well-defined reserve and resource. That said, we have a number of near mine targets that we would expect to explore as we get into production. So a number of opportunities, including the most realistic in the near term would be potentially bringing in more resources to the reserve plan. But then there are step out targets as well that we could drill when we get into production. But again, right now, we're very focused on permitting.
Why has the environmental study process taken so long?
I think it's taken so long because the NEPA process is designed to be iterative. And under NEPA, the requirements are to assess different alternatives to make sure that whatever decision is made ultimately has the least impacts on the environment. And also we have a large project, so it's large, it's complex, and so it takes a long time to get through. While it's taken a long time, we think that we're on the downhill side, clearly given the permitting milestones that we've just achieved. And we think that there's a very clear pathway forward from here. So it's been a long process, but we're very excited about where we are and where we can go moving forward.
How have inflationary pressures affected Perpetua?
I'll talk big picture because that's going to be ultimately the development of our project and the build out and then operations ongoing. And our feasibility study was completed in late 2020. We have a 1.3 billion CapEx number in that feasibility study. That includes 12% contingency. So we've got a number of things going for us. To link back to the prior question, while permitting has taken a long time, I guess the plus side of that is hopefully we'll see the world settle down a bit and we won't have the same pressures today when we're looking to build in 2024. That said, if you look at our overall CapEx, if you talk sensitivities and say you want to increase that CapEx another 10%, given the low cost nature of our project, especially in the early years, the NPV impact is pretty minimal at about 100 million for a 10% increase in capital. So there's a number of things we'll look to do to offset any inflation in our operating costs or capital estimates. But again, we've got a little bit of time to see the world settle down.
What else is left to discuss with the Nez Perce Tribe?
Yeah, so for those that aren't aware where the question's coming from, in 2019, the Nez Perce Tribe filed a Clean Water Act lawsuit against the company. We've since been in mediation with the tribe since February of 2021. So we're going on well over 18 months now of being at the table, which is exactly where we want to be. Both the tribe and ourselves want the same thing for this area, and that's ultimately for it to be restored, the environment to be cleaned up, and fish passage to be restored, and fish able to get back to their original spawning grounds. So if you think big picture, we want the same things for the area, and that's really positive. And we've been at the table, we continue to be at the table, looking for, mutually beneficial outcome. They are long-term stakeholder in the project, and we take that very seriously. And so we're happy to be at the table. And in fact, we just had the stay extended to late January of 23, so January 31st of 2023. So
can you elaborate on Perpetua's involvement with the DoD? What is the military-grade antimony trisulfide?
Antimony is one of those minerals or metals, depending on the end use, that is in just about everything, and people don't know about it. There's a number of end uses historically in terms of size of end use. Flame retardant, its use within flame retardants is one of the largest, but now we've got a big end use growing, and that's in a low-cost liquid metal battery of Ambris. And then there's a very strategic end use, and that's with the military application. So munitions, really anything that fires, antimony is used in. So again, the Department of Defense is, well understands our deposit given the role it played in World War II and the Korean War and historically. And so we have been working with the Department of Defense, and we just received those 2 funding grants to study turning our antimony from site into mil spec. So it's military specifications to be used in munitions and all of their products. So again, we're quite confident given mil spec was defined from our site, nearly 70 years ago or something. But yes, that's the work we're doing right now.
Just to add on to that, so there's 2 funding grants, one of which basically looks at taking antimony directly from site and turning it into mil spec, and the other one, the other program would be taking antimony from site, turning it into antimony metal, and then studying how to turn that back from antimony metal into antimony trisulfide. So 2 different study programs, part of a phase 1 study, and then if phase 1 is successful, there could be additional phases and additional funding down the road as well.
With this modified mine plan, what improvements to rehabilitate wildlife can we expect to see?
So I think in terms of wildlife, one of the key issues at site, given the rivers and the streams that are around the area, is fish habitat. So one of the things that early in our mine life, I mentioned the ASAOC work, which is separate, and that's early time critical actions that are happening before we get into construction and production. But our mine plan and our plan of operations and restoration calls for a number of different things. One of which is repairing one of the largest sources of sediment to the East Fork and the South Fork of the Salmon River. We would take care of that, so that impacts water quality, stream health, that sort of thing. So we would clean up that largest source of sediment today. We'll reprocess, reuse, and safely store about 10 million tons of previously spent tailings and other spent ore. Safely store that in a lined and capped tailings storage facility. So that's another key piece. Jess, anything I'm missing that you would mention?
Yeah, I think those are some of the biggest benefits. And then in terms of some of the improvements we've made, what the supplemental outlines now is significant improvements in things like the volume and duration of long-term water treatment, because we made refinements to our water management plan. We also updated our closure strategy, and as Chris mentioned, incorporated covered systems over the top of our tailings storage facility, and then also over on the top of the backfilled Yellow Pine and Hanger Flats pits. And really most of our improvements are around the 3 areas we heard the most feedback from in the draft EIS comment period, and that is water quality, water temperature, and overall project footprint.
Although you have a good cash position right now, that tends to burn very quickly at your current stage. Will you be looking to raise capital in 2023?
Yeah, it's a good question. Right now, we've got a good cash position, as you said, with about 28 million as of the end of last month. We are spending about 2 to 3 million a month, lower end in the winter months and the higher end in the summer months, as we're completing some of that early restoration work at site that Chris talked to. So the reality is that cash at our current burn rate would get us well into the second half of 2023, really through the end of the third quarter of 2023. which leaves a bit of a gap at the current run rate to final permits. The company is very focused on not raising equity at these levels or diluting our shareholders. So we are looking at a number of things, and that includes, we pulled together a plan that if we can't have a funding solution that doesn't dilute our shareholders at these prices, then we could look to reduce the run rate further. Now, there could be some implications to that in terms of efficiency of permitting if we lower that run rate, but we're also pursuing other funding opportunities, including potential government funding opportunities.
What is the financing strategy to ensure until the capital markets start flowing into the critical minerals sector?
Yeah, so I just touched on it in the near term or short term. Longer term, given the world-class nature of this asset, we're quite confident in our ability, once permitted, to be able to finance this project. As Chris touched on some of the highlights, our payback period is somewhere between 2.5 to 3 years, depending on the gold price you're using. And there's the restoration component and the cleanup we're doing. And so we're quite confident in our ability to finance, but we're also not going to finance if the capital markets are telling us not to. So, ultimately, we're not going to build a mine just because we want to. We need to make sure we've got the support of our investors and the banks, and as we move forward and get our permits.
Your cash burn has been $30 million over 14 months for a $2 million per month rate. Is that likely to continue? How much cash do you need to get to 2024 and beyond?
Our annual budget is around $28 million, or it was this year, and that included some of the early restoration work in the summer that would be sort of one-off, but we are also doing it next year. So we're close and are looking at a number of ways to make sure we're capitalized through permitting.
Why is your stock trading at such a deep discount to NAV?
I think, as I mentioned before, I think we're trading as if we won't get permitted, and as I touched on earlier, it's clearly been a long process. But I think what people are missing is how much progress we've made and the significance of this most recent milestone with the release of the supplemental DEIS shows very positive progress for our project in terms of permitting. So I think permitting is one overhang. I think market conditions, as just touched on and you alluded to in those questions, have sort of created a new emerging risk. But again, I think given how far along we are and given the clear path that we have in front of us now, we're very excited for the next chapter in our project.
How long will it take to get this project deal ready for a strategic partnership with a major producer?
Well, our focus is on unlocking value for our shareholders, and we are doing that through advancing our permitting. That, again, just like we're not looking to raise equity at these prices, we're also not for sale at these prices. So again, we are ultimately focused on unlocking value for all of our stakeholders, including our shareholders. And we think we will do that by advancing through permitting. So I'll shift the way the question was asked and make it, are we open to a strategic partner? And the answer is we're open to anything that adds value for our shareholders at the right time and at the right price.
Does antimony trade the same way as gold prices, or do you expect it to outperform?
It's very different, and Chris, feel free to jump in. Gold is a commodity, trades almost like a currency, if you will. Antimony has supply-demand factors, and so if you look at history and a forward-looking curve back in December of 2020 when we did our feasibility study, we had antimony prices at $350 per pound, is pretty conservative, but a good base in our feasibility study. Given supply factors and demand factors over the last couple of years, antimony has been solidly in the $5 to $6 per pound range for, I think, 18 months now, trading closer to the $6 per pound range. And again, if you look at those those market fundamentals, we would expect that to only have upside, because we do see supply coming off and grade coming off at historically strong sites in China, Russia, and other places. And then on the demand side, you have Ambri's new liquid metal battery that uses antimony with calcium. And so we expect some additional demand there as well.
What are the compelling reasons to invest in Perpetua?
Yeah, I think we've listed them, but just to reiterate, we plan to redevelop one of the largest, lowest cost, highest grade open pit gold mines. We have a critical mineral in antimony that's needed for national defense and clean energy technologies. And currently there is no domestic production of it in the US. And third, we plan to restore an abandoned brownfield site. So those are our key pieces of what differentiates us. And then in terms of why now, again, we're trading at a significant discount near, as of last month, near an all-time low, at least for the last several years. And so it's a very attractive entry point for new investors.
Perfect. Well, thank you both for your responses, and thank you to everyone who submitted questions. If you didn't get a chance to submit your question, you can reach out to the appropriate account manager here at Renmark. That concludes our presentation for today, but before we go, I will turn back the floor to Chris for final remarks.
Thanks, Noella, and thank you everyone for joining us today. For more information, please take a look at our website, perpetuaresources.com. And my contact information is also listed on our website. If you have any questions, please don't hesitate to reach out. Thanks again.
Once again, this was Perpetua Resources trading on the Toronto Stock Exchange and the Nasdaq under the ticker symbol PPTA. Thanks to everyone in Boston and surrounding areas for joining us today. Please stay tuned for other presentations in your area, and see you next time.